We talked about how to calculate total goodwill, and now we are going to talk about how to allocate total goodwill between controlling and non-controlling interest. So let me just draw a brief graph here. We talked about the total goodwill is the difference between the fair value of the firm and the fair value of all of the firm's net identifiable assets. The difference between those two, that is the total goodwill. So that is 100%, based on 100% of the firm. And then the firm is made up of the controlling interest. The controlling interest has a percentage of ownership, and non-controlling interest also has a percentage of ownership. The fair value of the firm is equals to the consideration transferred, which is also how the controlling interest percentage of the fair value of the firm. So which is also the consideration, how much the controlling interest is paying to obtain its interest in the firm. Consideration transferred plus the fair value of non-controlling interest. And fair value of net identifiable asset can also be allocated between controlling and non-controlling interest according to the ownership percentage. So fair value of net identifiable asset, if we multiply it by the controlling interest percentage, that is controlling interest relative, it's part of the fair value of the net identifiable asset. And if we multiply this fair value of net identifiable asset by the non-controlling interest percentage, and then we get its portion of the fair value of net identifiable asset. And then the controlling interest portion of the goodwill, actually it's equals to consideration transferred minus the, if we label this one as, if we label this as A, so that is, this is A multiplied by controlling interest percentage, and also A multiplied by non-controlling interest percentage. So, and then if we label this is B, so this is B and this is C, D, E. The controlling interest part of the goodwill is B minus C, which is considered, so which is here. Controlling interest portion of goodwill is consideration transferred minus fair value of net identifiable asset multiplied by its ownership percentage. And then the non-controlling interest portion of goodwill is D minus E, which is, so you can either use D minus E or you can use total goodwill minus the controlling interest portion of the goodwill, but it will give you the same answer. So you either use total goodwill minus controlling interest portion of the goodwill, or you can use fair value, sorry. You can use fair value of non-controlling interest minus the fair value of identifiable net asset, the total fair value of net identifiable asset multiplied by non-controlling interest ownership percentage. So those two are going to give you the same answer in calculating non-controlling interest portion of goodwill. So as you can see here, why do we use such a complicated formula? Because why can we not just take the total goodwill and multiply it by the controlling interest percentage and multiply it by the non-controlling interest percentage. We cannot do that. We cannot just take the total goodwill and multiply by each of those percentage. Why? Because in some situations, the firm is paying control premium. Because of the existence of those control premium, so the goodwill allocated to controlling and non-controlling interest will not always be proportional to the percentage owned. In the situation, if the firm is paying a control premium, actually, you cannot take the percentage because we would need to assume that all of the control premium paid belongs to the controlling interest. So that kind of distorted this percentage a little bit. That's why we need to, when we're doing the A consolidation entry A, we need to separate into A1 and A2. A1, we use it to mark up book value to fair value and allocating it to controlling and non-controlling interest. That is always in proportion to the ownership percentage. But in A2 is to recognize goodwill. In this situation, depending on whether the parent is paying a control premium, it will not always be proportional to the percentage owned. That's why we need to separate A1 and A2. So this is the formula for allocating. Let's look at two examples here. So the first example is basically we continue the example, the previous example one. What are the amount of goodwill that is allocated to non-controlling interest? So if you still remember, in the previous example, the Parker example, we calculated the total goodwill. So just as a kind of like a reminder of what we did. So we have control interest and non-controlling interest, and we have total 100%, right? And the fair value of the firm, we calculated the fair value of the firm is, the total fair value of the firm is 690,000. And this is made up of the consideration transferred, which is $70 per share multiplied by 9,000 shares. So this comes up to 630,000. And then the fair value of the non-controlling interest, that's $60 per share multiplied by 1,000 shares. So that is $60,000. So the value, the total value of the firm is the sum of those two. And that gives us 690,000. And then we also know the fair value of the firm's net identifiable asset. The total value of those is 600,000. And then the controlling interest has 90%. Non-controlling interest has 10%. So 90% of 600,000 is 540,000. And 10% of 600,000 is 60,000. And then the difference between fair value of the firm and fair value of all of its net identifiable asset is goodwill. So the total goodwill is 90,000. And then in the first situation that we said, we have a control premium here. So there are two ways to allocate goodwill between controlling and non-controlling interest. The first way is according to what we just said. So it is according to this table here. How do we calculate the goodwill which belong to controlling interest? We take 630 minus 540,000. That gives us 90,000. This is the goodwill belong to controlling interest. And the goodwill, which belong to non-controlling interest, you can either take 90,000 minus 90,000, so that gives us 0, or you can take 60,000 minus 60,000, that gives us 0 as well. So the goodwill, which belong to non-controlling interest, is 0. So as you can see here, because of the existence of control premium, the goodwill allocated to controlling interest and non-controlling interest is not in proportion to the ownership percentage. So here is another way to understand this. The control premium paid per share. The Parker is paying 70 to acquire something which is traded at 60. So this $10 per share is the control premium. And the control premium, because it is paid by the parent to acquire controlling interest. So the assumption here is all of those so because those are paid by the parent to acquire the control premium. So all of those control premium, those extra money paid, those should belong to those should be regarded as the goodwill for the parent. So so if we take $10 per share control premium, multiply it by 9,000 shares, which are held by the controlling interest, that is 90,000. And then after we take out 90,000 control premium, which should belong to the parent, there's only 0 left. And for this 0, we can allocate it between controlling and non-controlling interest according to the ownership percentage. So the thing here is, we need to first take out all of those control premium paid is 100% belong to the parent. And then after we have taken out those control premium, the rest of those we can allocate it between controlling and non-controlling interest. So here it just happened to be that we have 0 left. If we have, for example, 10,000 left, we are going to allocate some to the non-controlling interest. We are going to allocate some of the goodwill to the non-controlling interest. But here it just happened to be that there's $0 left. So this is a second way to kind of look at this control premium situation. And both of these will give you the same allocation of goodwill to the controlling and non-controlling interest. And another example, example 2. So this is a continue of the example 2 from the previous case. In the previous case, if you still remember, the second one is a no control premium situation. And we still start from controlling interest, non-controlling interest, and total. The fair value of the firm minus the fair value of all of its net identifiable asset equals to the total goodwill. The fair value of the firm is consideration transferred. So which is $17 per share multiplied by 9,000 shares. So that's 630,000. Plus the fair value of the non-controlling interest is 70 multiplied by 10,000 per share. So that is 17,000. So the total fair value of the firm is 700,000. Fair value of the net identifiable asset is 600,000. So the total goodwill is 100,000. This is what we calculated before. Fair value of the net identifiable asset of the firm is allocated according to the ownership percentage between controlling and non-controlling interest. Controlling interest has 90%. So that's 760,000. Non-controlling interest has 10%. So that's 60,000. Oh, sorry. So that's 540,000. So to calculate goodwill, so again, the two situations. The first way to look at this is according to the formula that we just talked about. Controlling interest share of the goodwill is 630,000 minus 540,000. So that is 90,000. And non-controlling interest share of the goodwill can either you take 100,000 minus 90,000 will give you 10,000, or you take 70,000 minus 60,000, that will give you 10,000 as well. Or the last way to look at it is in this situation, the control premium is 0. So control premium is 0. And then we add this 100,000 allocate minus 0 equals to 100,000. And then we take this 100,000 allocated between controlling interest and non-controlling interest according to the ownership percentage. So that is for the controlling interest, control premium is 0. And then we add 100,000 multiplied by 90%. That will give you 90,000. For non-controlling interest, that's 100,000 multiplied by 10% will give you 10,000. So those are the some of the different ways to calculate, to allocate the goodwill between controlling and non-controlling interest.